The Belgian copyright tax regime operates as a rigid structural landscape. The most recognized metric within this framework is the 15% withholding tax. But that exact 15% rate is never applied directly to a taxpayer's gross copyright income. Instead, the tax applies exclusively to a highly compressed figure known as the net taxable base. To understand the financial reality of this regime, we have to look past the top-line percentage and examine exactly how that taxable base is calculated. In taxation, deductible expenses act as a mechanism to shield a portion of your revenue from the final calculation. The Belgian copyright system implements a very specific tool for this purpose, the authorized flat rate expense deduction. This is not a single universal deduction. It relies on a strictly regulated regressive bracket system. As total income increases and crosses predefined tiers, the authorized deduction scales down. The system operates as a base reduction mechanism disguised as a simple flat tax. Start by visualizing the total, undivided gross copyright income. The tax code sets the first financial boundary at €20,590. For any revenue sitting within this specific tier, a 50% flat rate expense deduction applies. Exactly half of the income in this bottom bracket is entirely removed from the tax equation. The surviving half locks in as the first confirmed block of the net taxable base. This initial tier yields the absolute highest tax efficiency in the entire framework. The framework then establishes a second tier, capping out at €41,180. For income falling strictly between €20,590 and €41,180, the permitted deduction drops to 25%. Only 1/4 of the money in this specific slice is sheltered from taxation. The remaining 3/4 drop straight into the taxable base. As total income climbs the brackets, the architectural protection of the flat rate mechanism weakens. Finally, we evaluate any gross income that breaches that €41,180 ceiling. At this upper tier, the flat rate expense deduction falls to 0%. Every single euro earned above this limit drops directly into the taxable base. Beyond €41,180, the flat rate shelter disappears entirely, exposing all further income to the baseline tax impact. By systematically applying these deductions, we are left with the final consolidated structure ready for the next calculation. This compressed block represents the mathematical net taxable base. Only now does the system apply the 15% withholding tax to this specific reduced figure. The true financial outcome of the copyright regime is dictated by the geometry of the expense brackets, not the flat rate applied at the end. Accepting this mathematical tier system is the default, but it is not mandatory. Taxpayers have the option to declare actual expenses incurred to create the copyrightable work. The tax administration heavily scrutinizes actual expenses, treating their calculation as a primary axis of control during audits. Claiming actual expenses demands strict accounting separation. You must provide distinct, documented proof for hardware, software, and the exact production time dedicated to the copyrighted material. Stepping outside the flat rate system trades a mathematical guarantee for a rigorous evidentiary audit risk. Deciding between these two paths requires a strict calculation. Taxpayers should only choose actual expenses if their proven costs strictly exceed the combined absolute value generated by the 50% and 25% flat rate brackets. For most cases without meticulous cost tracking, the regressive flat rate tiers represent the safest and most efficient path. This structural analysis is strictly for informational purposes and does not constitute professional tax advice. Mastering the Belgian copyright tax regime requires shifting focus away from withholding rate and optimizing the sequential mathematics that reduce the taxable base.